Hello, everybody, and welcome back to another Anatomy of a Trade. And we have a cameo appearance today by Roman. So really looking forward to having our sensei go through Anatomy of a Trade. In this case, we're going to look at an S&P 500 options trade that was done by a student in the fall semester, Brian. And just really looking forward to having Roman on board, and looking also forward to when John comes back. But this is just going to be a special treat. So
well, thank you
why don't
so
we
much,
take a look?
Franz.
Yep. Why don't we take a look at Brian's trade, Roman?
All right.
So do you want me to give the background?
Sure.
Okay. Well, we can see here that the background initially is a downtrend, and we come down and have some sort of a change of behavior that leads us into a trading range that has a number of lower lows within the trading range, a number of swings into signs of weakness. And at that point on the second one, we get some sort of a rally. We can assume that the exchange of shares, or in this case, it's I guess index futures, but we can assume that the exchange has become exhausted, and that the sellers, even though they're managing to push price lower in these down sort of progressive downswings, they may have at least temporarily exhausted their ability to push price any further down. And then we see this rally come in, and the rally takes us up and to a higher high. But if we look back to the left, and I think Brian's labeled it very well here, where is the zone of selling that this whole downtrend originated in? Well, we can see that, and we can see exactly where price comes to. And at that point, we're making one effort. We get a change of behavior after that first push up, a second attempt to push higher that looks sort of like almost like an up thrust. And I guess it is in this little local structure. And that is where this option is entered. So that's what I'm seeing so far. What do you think, Roman?
Yeah, I mean, this is a great trade. Obviously, we're looking at a great winning trade. Plus, Brian is doing something very unique. Not a lot of people do that. And if people do this, they're not necessarily that successful. And as Brian was explaining in the class about his options trading, he uses the weekly options. So those are near the expiration options. So disclaimer right away, we do not advise trading weekly options. We're just showing you this trade as a part of Anatomy of the Trade series. We're looking at different trades. Franz and John look at different trades, and this is a completely different trade. Again, I would not recommend it to anybody who is not experienced in options and who is not experienced in weeklies. I think that the point of the entry, I'm not going to, come back to the analysis. Franz did a really good job here. I think the point of entry is extremely important, because what Brian is doing here is that he's selling into the strength of an upthrust. And we know that with options, you really, really have to initiate the position as the price still goes up, right? That it shows strength. In this case, we are selling, buying puts. Directionally, we are betting that the price will go down. So with that, you want the premium to be at its lowest when you buy it, and then you are waiting for the pretty fast momentum type of move. And that's what Brian has got. And this is, I think, in the span of about, 2.5 days, something like this. So let's say if he had a Friday expiration, then position was initiated like a Wednesday, and I'm just giving you an example right here. Okay, so point of entry is pretty good, again, into this sell-in zone. And then the local structure is that we have the final climactic action. I like this line. It's kind of like this expanding triangle. I really hate this pattern, but you have to know it. So buy in climax, then it seems like phase A is very kind of like typical for the continuation. There is not a lot of result to the downside, but look at the minus sign of weakness. And I think this is where you get the clue that, okay, something wrong is going on. And how many times have I been corrected incorrectly about minus sign of weakness as the lower low being followed by the rally into the higher high? People are saying that it's not possible. Well, in this case, you have two of them. Actually, you have maybe even more. Minus sign of weakness, higher high. Nevertheless, so here, once the position was initiated, I think that we could have some pointers, Franz, for Brian, except for the one that this is a great trade. So as the price goes down, there is some volatility during this day. We see some kind of apex that is suggestive of the continuation to the downside. Then Asian European session, we see more weakness, so more sign of weaknesses. And then look at what kind of rallies do we have here. 1, 2, pretty weak. So what's your expectation here? Probably of continuation because demand is not so strong. So we just touched the low of the minus sign of weakness. Now, the initial sell-in on the last day of trading here comes pretty aggressively. There is an extension to the downside that is aggressive. There is the volume signature increase. There is the spread increase that we've seen. It's almost that, it's instantly there at the next level. And I understand this trim by Brian. What happens here? Well, we're trimming around the area of the support, which acted before as the resistance. Pretty important level. But my comment to Brian during our discussion in the class of this trade was, look at what has happened in this area, obviously after the distributional pattern right here, and look at how we quickly went to this support. This aggressiveness is suggestive of continuation. And at least he could have done continuation during the session. We're not suggesting, okay, go to the next session where the premium is going to collapse more because of the time decay, but more of during the session, continue holding it until the next logical level, which he does. And because he just trims here. So this is brilliant. He's taking the profit. And the premium on the weeklies collapses much faster. I mean, like imagine the day of the expiration, the day before the expiration. I mean, like time is of issue. So I like this stream, and I like the exit here as well. Why? Well, the price starts to kind of stall a little bit as it goes down. So now there are thrusts to the downside and not a single thrust. So we're seeing some kind of shortening of the thrust again into the stop in action of the previous trading range. And here we are. So I mean, like Franz, I think it's a great trade. My question always about this trades: what is your win to loss ratio? Usually, when people talk to me about this type of trades, it's around 10 to 20%. But when it works out, this is times 10 times 20. Again, it's very attractive this way. But can you handle 10 to 20% of the times that you're going to be winning? So I don't know. This is not necessarily my methodology, not my cup of tea, but I've seen people being successful periodically with this type of strategy. Franz, so let's go through the post analysis.
All right, let's do it. So bias, obviously, and we'll just go with Brian's comments. And if we have any I guess, disagreements with him, we can mention it. But he's saying he did catch the bias correctly. It's a redistribution to be confirmed or to fail. So good catch there, Brian. His timing, yes, could have technically been better on the LPSY the next day. And I guess he's talking about where did the next day occur? Was that maybe that last really sharp, short upthrust before the whole structure collapsed. That might be what he's referring to. I'm not really sure. But the character of both the move and the setup itself, the preconditions are great. Great read there. Point of entry, really, really nice. Stop loss, I know it's not on the chart, but I set a stop slightly above the upthrust high. So yeah, he's using a stop. Add-ons, there weren't any add-ons. I did see that that little area of consolidation in the overnight market before the collapse. Potentially that could be a place for an add-on, depending on how committed he already was in terms of his risk management. He did trim on his exit, so great job there. And the exit itself was really nice. And looking at that trim number one, what I was thinking possibly is, well, what if we think our chart reading is good, but what if this is more of a backing up action that potentially could be occurring here, because it is a logical place for that to occur, even though the tape reading itself might indicate otherwise. So definitely trimming at that point was really, really good, and then getting out with the rest of the position. And he's got some notation there on why he did that, and you talked about that as well. So variance 95%, just about as close to perfect as you can get without actually being there. And then his comments, and this is where the rubber meets the road in post-trade analysis, because we're looking for mistakes that we make, even if they're minor mistakes, that we make consistently, so that we can become aware of our tendencies and not repeat them in the future, and even make ourselves better traders. So let's see what he says here. Not exactly perfect timing. I'm playing short-dated SPY options, so potentially could have entered the next day into that rally once it rejected and re-entered the trading range. And we already talked about that. And then best practices. So we don't want to just talk about our mistakes in our post-trade analysis. We also want to reinforce the things that we're doing correctly to continue to do them, because they add to our winning outcomes. And he says, you may have a different opinion on price point of entries, and correctly so. They would probably be different if I were trading the underlying. However, short-dated options can lose value very quickly, so points of entry can change. And as you pointed out, you want to buy going against what the underlying's doing, because that's when the premium becomes the most attractive. So great observations there. And then his feedback loop, I believe the larger structure is still redistribution, and we'll look for re-entry if we can't re-enter the structure. Just notes to himself about how to possibly continue with this trade. Considering I'm playing short-dated options, I don't have the ability to wait and see while holding contracts. It's too risky. Better to wait for the structure to tell me and re-enter accordingly. So just a reminder of the sort of discipline that he has to maintain, as you point out, with a very high return on a very low percentage of trades. So I think really, really good trade, Brian, and thanks for sharing it with us.
Yeah.
Any additional comments?
Yeah, really excellent. And I mean, again, there are a lot of nuances that Brian is handling very well. It's kind of feels like almost like a professional trade. And the way how he was explaining it in the class, I mean, we had an extended discussion about his overall approach, and he showed us some of the losing trades as well. So I mean, again, this worked out, but in a lot of cases it might not work out really nicely. Even if you're right in terms of the directionality, it might take a little bit longer than you expected. The movement might be not as aggressive, volatile, and so on and so forth. So it really matters, what kind of where you're entering, how the price moves, how quickly it moves, because you don't have a lot of time. So again, nothing that we're promoting here. We just marvel at Brian's trade here, at his execution, and just excellent job. Franz?
Just great summary, Roman, and thank you for joining us. Appreciate your cameo appearance. There may even be a few more to come. So stay tuned, everybody, and until next time.
Absolutely. Thank you, Franz.
Thanks, Roman.